Hello, everyone, and thank you for joining Ask a Care Navigator, Mondays with Maureen. Hi there, I'm Maureen Williams. I'm the Director of Care Navigation here at Four Seasons The Care You Trust, and we try to create this space on most Mondays to talk about issues associated with living well and aging well, and perhaps how Four Seasons may be of service. And I'm joined by a special guest today. Stay tuned. As always, if you have any questions about anything associated with Four Seasons, please call us at 866-466-9734 or go to our website. Lots of information there. And that is fourseasonscare.org. Spell out the number four, fourseasonscare.org. There's a way you can get information and ask inquiries and to get more information from us. So I also am delighted to share, and I'm so grateful to the Van Winkle Law Firm for serving as our title sponsor of this program, Ask a Care Navigator, Mondays with Maureen. You may know that the Van Winkle Law Firm is one of the most well-established and respected law firms in North Carolina, providing exceptional legal representation to individuals, families, and businesses in personal, commercial, business, and estate planning matters. And I particularly interface with this firm on estate planning matters. Should you want to gather more information or to request a consultation, go to that website, which is www.vwlawfirm.com, and someone will be happy to assist you. Well, I'm joined by a very special guest, and today's topic is on long-term care insurance, and I knew I wanted Tom to help us. This is Tom Hardecker. Hi, Tom. Tell us about yourself.
Thank you, Maureen. Tom Hardecker. I was a financial advisor for 30 years. I started in 92 and just retired recently in 2022. While I was helping people with their investments, I realized that they also needed to protect their investments and their assets. And long-term care was just starting to come onto the scene in the early 90s and then grew quite a bit into the mid 90s. And so I saw that as a need because I had seen it in my family. My grandmother spent 12 years in a nursing home, and I knew how devastating it could be to folks if they didn't protect themselves. So that's how I got involved in long-term care insurance.
Well, I've been wanting to do a program, Tom, you know this, about long-term care for a long time, long-term care insurance. And so in the work I do, I interface with so many different policies. I have a joke. I say, if you've seen one long-term care insurance policy, you've seen one long-term care insurance policy. There's so many out there. And then so that there's so many of us that interface with those professionally, but so many people that watch wonder, when should I get my policy? So do this favor. It's really helpful to me. Can you kind of give us a quick history of how you told us when they started, but give us kind of the big picture for long-term care insurance.
Okay. Well, basically, as I said, somewhere around the 90s, people were realizing that long stays in nursing homes were really getting very expensive. So there was a need there from the public, and the insurance companies picked up on that and figured, oh, here's a new product we can introduce and make money from. So again, there were numerous companies in the beginning that started to introduce long-term care insurance. They had no experience with it before, so they relied on the experience they had with life insurance. Life insurance and long-term care insurance are two different animals, but having no experience in this market, they use some assumptions from life insurance that really didn't work out too well. But that's how it got started. It's interesting. I always think when going through underwriting, life insurance, they're worried about what's going to kill you. Long-term care, they're worried about what's going to put you in a nursing home. So anyway, it started out rocky with companies really trying to outdo each other and offering crazy benefits along the way to entice you to go with them. Well, that's all fine and dandy back in the 90s when they didn't have any claims. Fast forward to now,
Now.
right, or the last 10 years, let's say,
Mhm.
they started getting claims and they did not anticipate the amount of claims and how expensive it was going to be. So the market has evolved tremendously since the beginning.
Yeah. I know you've seen some really, you said crazy benefits, amazing benefits.
Yes.
And I still see them helping clients, but those really are not available to people like us anymore.
No.
So we went from this, wow, let's get everybody on a long-term care insurance policy with crazy benefits. What's kind of the practice that you see these days? There's kind of a couple of categories of
Mhm.
policies, right?
Well, I think first of all, the need for long-term care insurance has not diminished since the beginning.
Mm-mm.
The need is still there for people to protect their assets. But the insurance companies, number one, many companies pulled out of the market. So my understanding is there are 6 companies that are left that do standalone long-term care. And then along came another type of long-term care insurance that they melded with life insurance, and they're called hybrid policies. So basically, you're buying a life insurance policy that's got a long-term care rider on it. These I see are being offered by agents, and I just want to make sure the public understands that in order to get enough benefit for the long-term care end, typically you have to buy a very high amount of life insurance because it's all based on the amount of life insurance, what your long-term care benefit is. So at this point, there's two.
Sure.
There's standalone and there's hybrid.
Right. Wow. So let's distill it a little bit further. So
Okay.
let's say you're thinking about getting a policy, and there are many people kind of an age is usually around 50 where people start thinking that or so. Yeah.
Well, personally, I bought my policy at 51. My aim was to buy it at 50, but I had the last child going through college and things were tight. So I bought it at 51. And it is wise to buy it as early as possible for a couple of reasons. One, you have to qualify medically, and they are
Mhm.
very strict. It's interesting if you're using a cane that may disqualify you. If you have high sugar, diabetes, that may
Mhm.
disqualify you. If you just had open heart surgery, they'll take you
Oh.
because that's going to kill you. It's not going to put you in a nursing home.
Gotcha.
The other thing is at a certain age, usually 65 or 70, they will require you to have a cognitive test with somebody that comes into your house and asks you a series of questions to see if you're cognitively alert. And I've had clients turned
Mm.
down because they didn't qualify.
Mm. Mm.
So, so basically, the two things that are needed are money, number one, to pay the premium, and two, your health has to be good. So the earlier, the better. The other thing is you see the prices going up
Mhm.
dramatically as you get older. And yes, some companies say they'll accept people up to the age of 79, but I've never seen anybody close to that age qualify.
Wow. And the premiums would be really
Oh,
high at that rate.
astronomical, right?
Well, let's say you at whatever age, and generally it's, I got we bought ours in our 50s too.
Hmm.
So mid 50s. So let's say you qualify, you pass the muster.
Hmm.
What should you look for or make sure you have included in your policy? Because like I
Okay.
said, if there's one policy, you've seen one each,
Hmm.
our policies would be very different. So
Correct. Yes.
tell us what we should make sure to think about, really think seriously about including in our policies.
Well, obviously, the big expense is if you end up in a nursing home.
Yeah.
And you always hope that's the last place you're going to end up. But the reality is, a 65-year-old has a 70% chance of needing some type of long term care in their lifetime. And if you're a couple, that 70% goes up dramatically, that one of you is going to need some type of care. So, nursing home has to be covered. Secondly, assisted living. So, assisted living is like a step down from a nursing home. It doesn't require 24-hour a day medical supervision. But for many people, it's where they can receive care without being in a nursing home. It's less expensive. And thirdly, and to me most importantly, is home health care. So you want to make sure you understand how the benefit works with home health care. We would all prefer to age in our homes.
Right.
Now, maybe we need care coming in to help with things like bathing, or to help you prepare meals, or maybe medication. I saw this with my mother. She was very confused with her medication, and luckily my sister could lay it out every week. But if you don't have somebody to do that, that may be a need. So home health care is extremely important. And what you have to think about is, do you need somebody for 4 hours a day, 8 hours a day? If it's $25 an hour, let's say that's an average. So 4 hours a day would be $100. And if it's needed every day, well, that would be $3,000 in a month. If you need somebody 8 hours a day, that's $6,000. And don't even think about having round the clock home health care, because if you need that type of care, you're much better off in a nursing home. The other benefit that you're going to see, or hopefully see, is adult daycare. Now, this sounds funny, but basically, there are these daycares set up where the person who needs the care gets some socialization. They may be playing bingo. They might be doing something where the partner who's at home and still healthy gets a chance to do their chores and do whatever they need to do, and not have to worry about leaving their mate at home alone. So that's another benefit that's typically offered. The other important thing, especially if you're buying this younger, is you need inflation protection. So what I saw in my career is that on average, the long-term care costs go up by 5% a year. So you need a policy that's going to keep up with that, because the average age of somebody going into a nursing home is 84. If you buy your policy at 54, it's going to be 30 years, hopefully, before you need that care. Right. Anything can happen to anybody at any time. We all know that. But if you don't have inflation protection, by the time you need the care, it may be woefully inadequate.
I think that's very brilliant, Tom, to include that. And also, one thing we didn't talk about earlier is there's this waiting period or elimination period.
Yes.
Can you share what that is for the audience?
If you have a benefit that's going to kick in on day one, you're going to pay a very high premium for that. So the companies have what's called elimination periods. It's like a deductible for your car insurance, or a waiting period. Typically 30 days, 90 days, 100 days. The way I look at it is, I've always advised my clients to take the longer elimination period to save on the premium. The hope is that if you have a 100-day elimination period and you're, like, let's say, in a nursing home, you're hoping that Medicare is going to pick up a big portion of that. There's no guarantee, and it's very restrictive. But if you read your Medicare policy, that's if you're 65 and above when you're needing care, Medicare can cover you in a nursing home for up to 100 days. Now, they fight like all get out not to cover you. So, but let's say they cover you for 50 days and you have a 100-day elimination period, you're going to have to pay from day 51 to day 100 before your policy kicks in. When you look at the amount of premium you save by having that longer elimination period, I think it's worthwhile.
Right. So I just want the audience to know that's something you're going to be asked. How much
Yes.
can you self-fund for nursing home or assisted living or even home care during that elimination period?
Right.
Well, Tom, having said that, we've put a lot of information out here.
Yes.
Where could our viewers go to learn more about long-term care insurance policies for themselves or for their loved ones? What would you recommend?
Well, let's face it, there's a tendency for all of us to just Google it right off the bat and see what comes up. And I would want to warn people that just because a salesperson can offer long-term care insurance, it doesn't mean he or she is an expert in it.
Right.
So what I advise people to do is, if their financial advisor does not offer it, he or she may know people that are in the business. And if not, go to your attorney. And your attorney, odds are, knows who in your local area is a good long-term care expert. And if not your attorney, try your accountant. But I prefer if you go to a professional person to get a referral, as opposed to just Googling a bunch of different companies that are just going to try and sell you whatever policy they can make the most on.
Right. So we've talked about a lot. We've gone through the really big picture.
Yep.
We kind of brought it local. There's, the history of these things. There's two options, really, the standalone and the hybrid.
Right.
We talked about, what to include in the policies, when to do it, the elimination period, and now how to get more information. Is there anything that we haven't been nosy enough to ask you? I know it's a big topic.
Well, if you're sitting down with somebody, if you've gotten to that point, I would ask them for a sample policy. And if you really want to be diligent, you take that sample policy and bring it to your attorney and say, do me a favor, go through this and let me know if this makes sense for me. I rely on professionals to give me advice, and especially people that I'm already dealing with, as opposed to strangers. So that would be my recommendation. And keep an open mind. There's a lot of variables in a long-term care policy. How many years do you want it to cover? If the average stay in a nursing home is 2.9 years, do you want to buy a policy that's only going to cover you for 2 years or 3 years or 4 years or 5 years? Obviously, the price goes up the longer. The elimination period, as Maureen brought up, is very important. Also, how much is your daily benefit? Now, we're looking at, in this local area of Asheville, North Carolina, average stay is $475 a day.
In a nursing home.
In a nursing home, and it may be different where you live. Do you have to cover all $475? Not necessarily, because if you're in a nursing home, your Social Security could go towards part of your premium, because let's face it, you're not eating out, you're not having laundry done, you're not going to the dry cleaners. There's a lot of expenses you don't have. But you do want to be careful to make sure that you're not draining assets that your partner, let's say your partner is still at home and healthy, you don't want to drain the assets that your partner may need.
Sage advice. Yes. Well, Tom, is there anything else we should include? Because this is just rich. He's great at this.
I feel that long-term care insurance is very, very important, because I've seen people who have said, no, I don't need that. Especially men have a tendency to say, I'm going to call Dr. Kevorkian. I've heard a lot of funny things over the years that I've been doing this, but also I've seen people go through $1 million or more, and it's insidious. What happens is the person goes into the nursing home, the wife at home, this is my mother, writes a check for $12,000 for the first month. Boy, that hurt, but not so bad. Second month comes along, another check, $12,000, $13,000. Third month, all of a sudden a year goes by. And now it's been $150,000 and the person's not coming out. So how many years is that person going to be able to pay? Are they selling assets at the wrong time? Are they taking money out of IRAs and being taxed badly? This is a planning aspect.
Yes.
The other important thing is that if you're the one that needs the care, you want to have the options.
Yes.
You want to go into a good nursing home, and there's bad ones out there. You want to have a private room. Think about rooming with another 85, 90-year-old. It's not pleasant. You want to have a private room. So you want to be able to call the shots if and when you need that type of care. And if you need to have money or you need to have long-term care insurance. And you have the insurance to protect your assets. So I recommend that everybody that gets to the point, kids have left the house, you're now facing retirement, you're in your mid-50s, take a hard look at long-term care. And before you say no, make sure you understand what your exposure could be in the future.
Wow. That's a great way to finish this. Tom, thank you. Tom,
My pleasure.
He's helped so many people personally. He helped professionally, but now he just helps people personally. So thank you for helping us and helping our audience. Okay. And this is just the tip of the iceberg.
Oh yeah, there's
just
a lot
the tip.
more.
But think about it. I like what he said at the end. Don't just cast it off. Think about it. This might be best for you and your loved ones. I think of this also kind of, how advanced directives are a gift. I say that. I think this might be a gift to yourself and your loved ones. It's just another level of protection and planning.
Absolutely.
Thank you.
My pleasure.
Thank you so much. And so this is something I wanted to talk about for a long time. And periodically I'll have other guests because I think you need to think about these things, particularly if you have to file a claim. That's the other flip side of this coin.
Oh, boy.
Yeah. We'll leave that for another day.
Right.
Well, if you have any questions, call us, please, at 866-466-9734, or please go to our website, which is fourseasonscare.org. And this episode is airing on Monday, February 23rd, 2026. So join me in another week, which is Monday, March the 2nd. Oh my goodness, it comes so fast. And we'll have another Ask a Care Navigator, Mondays with Maureen. Thank you, everyone, and have a great day.
Thank you.
Bye.
Bye.